Good morning, it's Harvey Jackson. Just going to get through some news items. The top news item, actually, soybean trade and how it's actually taken off. Now, just a quick look at what that might mean here. So, um, as you can see here, soybean hit a 15-month high on U.S. trade deal hopes. Now, uh, there's the other things kind of pointed out in this article as well. Biggest driver was the news from the potential between China and the U.S., which may move more purchases back to the U.S. from Brazil. Now, uh, and I think that's might be a little bit premature, but let's play it out. And again, um, if history repeats itself, it's more in this article here. Um, a lot of the trade is maybe rather than it being limit up, it did gap higher, but it didn't actually continue to you know the full extent of the trading range that it could trade. So, despite the potential for a positive outcome, investors remain cautious due to the high market valuations of the risk of disappointing earnings. Federal Reserve potential rate cuts liquidating ease could further influence markets. However, the market reaction to any of the negative developments from the Trump-Xi meeting could be more pronounced than the positive news, which we've seen in the past too. Um, yeah, they didn't stick to the trade one phase deal, and yeah, there's some teeth in it, but President Xi also knows that Trump has only got like 3 more years of being in there as well. So no trade deal is going to go beyond that timeline. Investors anticipate a new Argentina reforms after Milei midterm victory, and the point, he won by a landslide in his midterms. But I just want to point out what I got highlighted here: mining projects for copper and lithium and rare earths. Uh, those take a decade to come to fruition. This Graham Stock, senior sovereign strategist, RBC Global Asset, and Andrew, you do need more than 2 year horizon to make the commitment, and because just like the U.S. midterms, there's every second year there's midterms, and it could change uh, the power of the Congress and the government, and uh, similar to the U.S., but also saying that they're going to try to push this through pretty quick. They're going to maybe sidestep some of the environmental issues that would come through, and similar to what Canada's trying to get through here too, because Canada's says they're going to explore and everything. So far, our clown show Carney hasn't been able to get anything done. Um, Another of note, the Daniel Smith in Alberta has used the notwithstanding clause to push through the back to work legislation. Basically, for the teachers, there's 740,000 students that are going to be back to class soon, and it does give them a 12% wage hike. I don't know what the heck they were actually wanting. Maybe they want their pensions for their kids or something. I don't know. Um, just get back to work. Uh, Quick look at the supply and demand. And again, I'm just going to point out 41 bushel to the acre isn't a big number. The largest number that we've seen was back in 2016, 2017 on the S&D. So that was 42.3. So if you move, a 10-year average minus your 28, you're going to be over a 40 bushel crop anyway. But just because we have a supply issue, I think even 12 and a half is going to actually be really hard to achieve. But I'm trying to put some optimistic numbers in there, and then I have like a 6.5 million metric ton export. We hit 9.3 last year, and 11.4 on the crush. With those pretty lofty numbers, knowing that we've got a lot of displacement. China not buying beans, and oil and meal, and U.S. we're not in the best shape talking to them and getting cooperation with trade right now either. So I've got a carryout at 2.9 million metric tons, which is a 15% carryout. So if you look at it, we're going to increase from 10.9 to 15.1 carryout, and if I move that to even a higher bushel to the average. Or to the highest that we've seen, so 42.3, I think it puts it right in the high 20s. So So this is just a graphic of production with the 41 bushel crop, your export and your crush numbers, and then your ending stocks. And just a different way to show the same chart, but maybe or the same numbers into a different chart formation. Active weather, Manitoba's getting hit. The Dakotas are getting hit as well. The where the snowfall is going to hit, and you can see the Rockies are definitely going to get some snow, and even Edmonton into next week. Um, just a quick look at some of the moisture. So this is accumulated precipitation for the whole year. You can see that it is a lot wetter in the Manitoba and southeastern Saskatchewan, and then there's a pocket up in the Swan River Valley as well, I guess, or farther north than that even. But you can basically say wet to the east and drier to the west, and that shows up more on difference from normal soil moisture. Actually, even covers the south of Calgary. But when you look at it as a percent of soil moisture, it just basically divides the provinces right in the middle of Saskatchewan. Just a quick look at what the markets are doing. 620 is the canola November futures. January is 634. Basically just trading just a fraction of a dollar up. Rapeseed, fraction of a dollar up as well on the November contract. Soybean oil, just a fraction of a penny down at 50.40. Palm oil is down again. It seems to be counter the North American market a little bit. Crude oil right at $60 a barrel, 60.50, and just pulling back from some of its gains last week. Soybeans up another 9 3/4 cents, and the wheats are up 3 to 5 cents, and the Canadian dollar is just basically going sideways here. So here's your January contract, basically just going sideways for the last just about all of October so far. And if we're looking at new crop, so this is new crop 2026. We are just touching that range where we're making lower highs when we're back into the wave up. It's if you haven't made a decision to get some canola sold for new crop, this could be a good place to get your 10 to 15% sold here. European rapeseed, basically just making back to the previous highs. So if we break out of there, there's some bullishness to that as well. So it has to get above that 200-day moving average. So right now, the differential between European rapeseed and Canadian canola in pricing Canadian dollars, $143. Now, it's going to get a little bit more wonky to figure out as the November contracts are going to be expiring here at the end of this week. Soybean oil futures basically trading sideways here, really doing nothing. Basically getting squeezed between your 50 and the 100 and the 200-day moving average, and kind of still chopping sideways here with no news on the renewable fuel or biodiesel or anything like that. But soybeans have taken off. We're in the second day of green candle, and we've got the full retracing back to June values that we were at. And if we're looking at the soybean futures for November 26th, we're at $11 there now. So if we can lock in a little, maybe 10 to 15% of new crop sales for next year, I'll be looking at doing a futures only at $11, just to have something covered for new crop if you're going to grow soybeans next year. Soybean meal futures, crude palm oil, as I said, it's on the leg down. Looks like we've got some support at the 200-day moving average, but possibly to hold it. Crude oil back up, and then it's pulling back down at the moment. Canadian dollar, basically just going sideways here, a little bit higher and lower there. But here's your spring wheat. Looks a little ominous when you see this much timeline on the chart and how long we've been going down. Kansas, nice little leg up here as well, along with Minneapolis. Same thing with Chicago, nice leg up. We're up against a 100-day moving average. 200-day moving average is up here on this long trend line here. Corn futures, right at the point where we should be making some more sales, and that would put us back equal to the early September values and even values that we saw back in July. Live cattle, just absolute dump. And that's all on the Trump news that he wants to cheapen up beef prices for the consumer. Same thing with the live feeder cattle, and then the hogs following that same complex down. That's all I have for you today.